we are ready. The class is on record. So I have sent the new link to the class, so those who are right in the Telegram group can join us right now. Okay, so first let's move our price chart to a trending chart. So I will make use of a trending market. So before we get in right here, you guys need to understand that there are different ways in which you can set your take profit in the market. So what we're going to discuss about in this class today is about how you can set your take profit in the market. So let's just go through right here how to set take profit. Yes, this is how to set take profit. So this is what we are going to be talking about in this class today. Apology for that. I think there is an update on the trade I'm monitoring. Just give me a few seconds so that I can just check what is going on right here. Right, so seems we are going to have a trade entry. So guys, if you are a trader in the commodity market, there's an active trade right now which we are going to have. So I am going to send you the entry of the trade after this class. I'm yet to make an entry right now, but you guys can make an aggressive entry. So guys, check your chart. If you are a trader in the commodity market, you can check copper. So I am going for a long entry on copper. So on copper, I am going for long entry, and so I am going to enable one of my hang-on traders. So if you're a trader right now, let's go to copper so that you can see copper as well on your chart. So let me show you copper, what I have on copper before I take the trade right here. So as you can see, copper is as a key level support at the price of the 4.020, and this was a previous demand zone. You can see when price got to this level right here, we got the retest and the push up, and the price currently right now is showing us a volatile bullish interest right here. So I'm trying to look out for a small long entry right here, whereby I have my stop at the low of the 3.954, and then I'm getting the next key level structure at the price of the 4.36436. So that will be 2.2 risk to reward ratio. So if you do not have enough capital in your account, I advise you not to take this trade, because copper tends to have a kind of a wide spread. So if you have a small account size, my advice is do not trade this currency pairs, right? So I'll be looking out for an entry on copper. So guys, hang on, I'm trying to load my trades, right? So this is what I do, and then this is one of the opportunity of being a member of the mentorship class. So anytime I take a trade, I will always share with you guys that okay, this is the trade I want to take. So please hang on, I just want to take a small position size right here on copper, and I have you guys can as well take yours. Make sure you don't risk more than 1% on your account, right? Don't risk more than 1%. Maximum on your account should not be more than 2%. If you're a pro trader, if you really know what you are doing in trading, if you're a pro trader, like what I'm going to do, I'm not going to risk more than 3-4% on my account. So make sure you understand what you are doing, right? So I'm just trying to take my own trade right now, so you guys can do that on your end. So hang on, like I told you, I'm going to take a small position entry. I want to risk something big, because I know trading, no. So I just initiated my own position right now, so I just want to see some parameters before I proceed with the live stream. So let me just go through right here, 3.95, and we're going to be targeting the 4.3, right? So that would be nice. So I executed a small entry right here. So if the market keeps on going up, then I'll keep adding to my position. So now let's get back to what let's use this chart right here as an example of how to set a profit in the market. I already how to set a profit in the market. So first thing right here is we have the we have the, what is it called, we have the how to set take profit. So as a trader, if you have an effective trading strategy, you need to know how to set your take profit, because if you do not know how to set your take profit, this can as well affect your result in the market. Because if you make profit in the market and you don't know when to get out or when to take your profit or when to defend your profit, this can affect your trade. This can affect your trade, thereby you turn a winning trade into a bad trade. So there are different ways in which you can set take profit in the market. First, your take profit depends on the type of trader you are. So the first question I'm going to ask you is, are you a scalper? Are you a day trader? Are you a swing trader? Are you a position trader? Or are you a news trader? So these 4 factors is what would determine how you set your take profit in the market, right? Now, okay, so first, as a scalper, you tend to trade on the 15-minute, 5-minute chart. Unfortunately, I do not have 5-minute chart on this price chart right here. I do not have 5-minute chart. So if you are that trader who is a scalper, you want to be trading on the 1-minute chart, the 5-minute chart, and the 15-minute chart. Someone said, please reduce the speed. I am not so good in English. All right. Someone said my speed is too much. He is not a English speaker. He is from Spain. He doesn't so much have a strong English or background. Right, I reduce my speed and I promise to use a simple English, right? Because the benefit of this class is for every or each one of us to understand what we're talking about in this class. So right now, I said there are 4 or 5 trading types of traders. I mean, so the first is we have scalper. We have what? Day trading. We call them day trader, right? We call them day trader. And we have, what is next? We have swing traders, right? And we have position traders, right? We have position traders. Okay, position trader, or let's make it position trading. Okay, position trader, right? And we have news trader, right? So these are the 5. If you count this from the beginning, 1, this is 1. We have the first one, this section right here as the first trader right here, that is a scalper. We have the second trader, that is a day trader. We have the third trader, that is a swing trader. We have the fourth trader, that is a position trader. We have the fifth trader, that is a news trader. So if you are in this class, if you do not understand what scalping, day trading, swing trading, position trading, or news trading is all about, please signify before I proceed forward, right? If you do not understand what scalper, day trader, swing trader, position trader, news trader is all about, please signify. Please, guys, please signify. If you are in this class, if you do not know what scalper, day trader, swing trader, position trader, news trader is all about. So I believe every one of us right here know what scalper, day trader, swing trader, position trader, news trader are all about, right? Okay, good. Now, scalper is a trader who tends to trade on the lower time frame with the objective of making small profits, right? So they go to the 1-minute chart, 5-minute chart to look out for trade entries. So that is a scalper. And the day trader, these are traders that tend to trade on the time frame which is higher than the scalpers. So if a scalper is trading on the 1-minute or the 5-minute chart or the maximum 15-minute chart, the day trader will start from the 15-minute chart all the way 30 minutes 1-hour chart, right? So these traders must close their trade before the end or the approximation of 24 hours. That means before each daily market close, they have to close their position, right? And we have the swing traders. These are traders that tend to hold their position for days or weeks. So they tend to trade on the higher time frame, starting from the 4-hour chart all the way to the weekly chart, right? And we have position trader. This type of trader, they can hold their position for weeks or months, right? So, and we have the news trader. These are traders that trade only news. So the type of trader you are, they can determine how you set your take profit. And then another factor that can determine how you set your take profit can also based on market structures, what you have in the market. All right, now let's start from the type of trader you are before we move to the market structures, right? And before we move to strategies, because your strategy can as well determine how you set your take profit in the market. Your strategy can determine technical actions, technical formations on the price can determine your trading style can determine. So as a scalper, you know, if you take a trade on the 1 minute chart, you have to exit your position before 15 minutes chart, right? You have to exit your position before 15 minutes chart, right? So if you are a day trader, you know you have to exit your position before the close of daily or candlestick, right? So if you are a day trader, your stop loss your take profit can be okay. If I'm in a position, I have to exit that position if my take profit is not it before the close of daily price. So you know, as a day trader, your take profit must be you must exit your trade. That means you must have a mental take profit. You know, a mental take profit is a type of take profit whereby a trader has to close his or her trade even if the automated take profit is not being hit or triggered. So that is what we call as a mental take profit. A mental take profit is a take profit that a trader has to manually close his or herself even if the market doesn't hit its automated take profit. The same goes for swing trader. As a swing trader, you know, okay, you are looking for take profit from one swing to another. Now, once you have decided the type of trader you are, now we can now move on to the next section, which is based on the technical levels. So now on this price chart, I will wipe out some things right here. Okay, let's just move right here. Let's go back to the higher time frame. So I'm gonna wipe out everything right here. So let's take, for instance, let's enable a watermark on this price chart so you can see this chart. Okay, I just took a trade on copper and I sent it out to those who came to the class earlier, and this is one of the advantages of coming to my class early. So let's go through the British pound sterling pair against the USD. I want to use the British pound sterling as a case study, so I'm going to wipe out everything on this chart. Once I wipe it out, then I mark my key level structures once again. So I mark this level right here as a resistance structure, and I mark this level right here as a support structure, and then this level right here as a minor structure. We can make this level to be a black color as a minor structure, and then the next level right here as a major turning point. We can make that one to be golden line. So after I mark my key level structures right in this market, yeah, I told you guys yesterday in the live stream we held on TikTok. And then please guys, after this live stream, please try to follow my new live stream TikTok account. I will forward it in the Telegram group, in the Telegram channel. So if you're in the Telegram channel, please try to follow that account, because on that new account, that is where we're going to be going live. Now, I told you guys we have a demand structure right here yesterday on the live stream we held on TikTok. And I told you I'll be looking out for a bounce of price from this level for a long entry, right? Now let's say, for instance, you want to take your trade at this level right here. The question now is where should you place your stop loss, and where should you put your take profit? Your stop loss as well can also determine your take profit target. You know, technically, or in terms of risk money management system, if you want to take a trade, the first thing you have to think is based on risk. You know, if you are risking the value of $100 in a trade, let's say for example you are risking $100 in a trade, you know, the minimum take profit you should target should be what? Should be at least ×2 of your risk, which will be what? $200. You know that. Now if I were to be a trader in this market, if I'm going to set my stop loss to be $100 at this zone right here. So my stop loss as well can determine my take profit target, which means I have to target at least ×2 of my risk. So if from my entry at this zone right here, if my entry is at this level and my stop loss is $100 to my entry level, it means ×2 level, maybe the ×2 is like around this place to be $200. Then it means my take profit should be at this price here, right? But most of the time, this is not the best way to set your take profit, right? So let's use our risk to reward ratio. Let's say, for instance, I want to make my entry from this level, right? My entry from this level, right? So after I use my risk and profit reward tool, and I set my stop loss to be right here, which my stop loss to this level is $100, right? $100, right? Now the question is, I must have a room for at least minimum of 2 times my risk. Now, which will be 2. You can see that we have 2.0 right now on this price chart. So which means if the price should get to this level right here of the $200, then I should be looking out to do what? To exit my trade. So this is based on setting take profit based on risk to reward level, right? So take note of that. Number one, your take profit can be set based on the type of trader you are. So this can be determined by maybe you're a scalper, you're a day trader, you're a swing trader, you're a position trader, or maybe you're a news trader, right? And number two, your take profit can be set based on your risk to reward setup, which requires a minimum of 2 risk to reward setup. Now, number three, another way in which I love to set my take profit is based on setting take profit based on technical key levels. Now, what is technical key levels in the market? So if I were you right now in this market, if I were to be looking out for a trade entry right here and I want to set my take profit, I won't set my take profit right here. Instead, where I would love to set my take profit would be at the technical level. And where is the technical level right here? This level, horizontal line right here, is the technical level. And why is it a technical level? Let me show you why it's a technical level. So as you can see on this price chart, after I marked my key level structures on this price chart right here, what did I do? I first marked out important structures. You can see that this is a resistance structure. We can see when price got to this level, we got the pants to the downside. At this level again, pants to the downside. When price broke this level through an obvious volume, it shows us right here that before the price was able to defeat this place, it resulted into a tug of war, thereby constituting violence in this market before the bulls were able to break out. That means the bulls took or broke this level with violence. That is the volume right here. You can see the long bullish candlestick at this side right here. So it shows us there was a violence right here before the market was able to break out this level. Now again, price traveled back to this level. Technically, we hoped this level should have turned into a new support level, because whenever a resistance structure is broken, what should happen? A resistance structure technically should serve as a support for price. But this time, price didn't respect this level as a support level. Instead, the bears did what? They ensure a bearish close into this level. Thereby, we have a bearish Marubozu candlesticks. This is one of the variations of strong bearish candlesticks in Japanese candle art of charting, right? Now, price navigated all the way down, and before price navigated down, you can see there was a bearish order block right here. You can see this long bearish candlestick right here. This long bearish candlestick right here proves that this level right here is a significant level. That means whenever price gets to this level, it always serves as a point of interest, which we call the PO high. Am I communicating? Please, before I proceed forward, I want to know, guys, if I'm communicating, if you guys can understand what I'm saying in this VIP class. Please, if you are streaming from YouTube private, let me know. If you are streaming from Zoom, let me know. If you are joining us from TeamViewer, let me know. If you are streaming from Google Meet, let me know. If you are streaming from the streamer, let me know. If you understand what I'm saying right here, please let me know. If you have a question, please let me know.
Understand, sir.
All right, thank you. You guys can send a message as well. If you understand, please let me know. Right, if you have a question, you can raise up your hands. If you have a question, you can send it through a message. I'll read your message. Right, I think the message will be better so that we don't constitute echoing of voice through our audio calls and the responses. Right, if you have a question, you can just raise up your hands and I will wait for you to type your questions. Right, if you have a question, just raise up your hand. There is a way you can raise up your hands on your streaming device. You will see a palm at the bottom or at the right of your streaming device. Just click on it to raise up your hand, signify if you have a question, right? Do you have any question? Since no one is raising up their hands, then we can proceed further. So before we proceed further, for those of you who are late to the class, I took a trade on copper. So let me share with you so that I am being sincere to every one of you. And this is what I do. Whenever I take a trade, I always share with my VIP mentorship students. So if you're in this class today, you are here as a VIP student or as a free student who is taking advantage of this free class for today only. So I just want you guys to see how the VIP mentorship is all about, because a lot of students have been asking, oh, they want physical class, it is difficult for them to understand online class. So this is why I just want you guys to have a view of the online class so that you can know maybe this is okay for you or not, right? So okay, so let me know, guys. All right, someone has a question. I think someone has a question. Okay, someone said my account is $1,000. Can I take copper? If your account is $1,000, if you are trading on my broker, you can take 0.01 if you are using my broker. And that is why I said you guys should use my recommended broker, because if you use my recommended broker, I can be able to help you calculate your risk position size, because it's a broker platform I'm using. So I'm familiar with their parameters, their spread, their swap, their charges. So I can easily help you to decide. But if you are trading on another broker, I can't easily help you to know their functioning or their parameters or their modes of transaction, right? So if you are trading on my recommended broker, which I always advise you to do, they have low spread, fast market execution, and you can trade a lot of assets. Then if you have a $1,000 in your account, you can trade copper. All you need to do is just take 0.01 on your account, right? Thank you. I'm currently in a trade on copper, so let me show you guys before I proceed forward, because I can see a lot of students are now joining in. And I always tell you guys, let's always keep to time, right? Let's always keep to time. Time is money, and in trading, you all know time is money. Once you waste your time, once you miss a time, the trade has gone. So I took a trade on copper. Let me share with you guys how I got this trade set up. I've shared this trade set up with students who got earlier into this class. So if you're just joining right now, you might have missed a nice entry, but anyways, you can still wait for a retracement. So based on copper, I share with the traders at the beginning. I said the copper, I've been monitoring copper for a long time right now, and I can see copper is at a strong technical level, and we went on for a long right here. We already bought right here, we'll wait for a long right here. So it was based on the technical levels I can see on copper. And then right here we have a key level structure right here. This is the key level structure. We can see whenever price get to this level, we have a bounce to the downside, resistance, and the resistance. And there was an obvious volume that broke out this level right here. We got a breakout of volume right here all the way up, and the price came back to retest this level once again right now. So this is why I'm looking out for a long, because this was a previous area of demand structure. So price pushed back to this level, and this level is a point of interest for buyers in the market, because they know whenever price take to this level, it would definitely tend to attract more traders in this market who want to look out for a long entry. So this was the reason I executed a long entry, and this is based on the law of demand and supply, or support and resistance structures in the market, right? So I already went for a long entry, and currently right now, let me check, I should have been in profit right now, because the market has moved right now a little bit. If you're in a profit, you guys, you can just send your charts on the trade on Telegram. So let me know, right? I should be in some profit right now. Okay, I'm almost getting to profit right now on copper. So that is how I got the trade on copper. So now let's get back to what we were saying earlier on how you set to take profit in the market. So as I was saying, right now on this day chart, this level is a point of interest. So if I'm going to be setting my take profit in this market, where should I set my take profit? I should set my take profit based on this key level structure right there, because it's a technical key level. It's a point of interest whereby traders will be looking out to either short or long, or to break out of this level, or to bounce back from this level. So this is the point I'll be looking at to set my take profit. So there are two ways I can set my take profit. One, I can set my take profit to be a little closer to this level, or to be at this level. Now the question is, why should I set my stop loss to be little closer to this level, or to be at this level? The reason why I want to do this is, most of the times price may not hit deep into this key level, and then price will crash down, because there could be a lot of pending order at this level for a short setup. There could be a lot of short limit order right here, whereby price may not get to this technical level. and sometimes price can get to this level. So what I'm going to do right now is I'll just make sure my TP is around these zones right here. All right. But if I can see the market right here has a lot of prospect, have a lot of possibility to go into more bull rally, then I can use this level right here as my TP1. As my TP1. And then I will use the next, let me just wipe out all these things right here. All right, let me just go back to the British pound sterling paid against the USD so that you guys can see what I'm talking about. So I swipe out this right here, and then all this on the all this. So if I'm setting my TP1 right here, I can decide to set my TP2 at this level. That is, if I can see when the price keeps on getting to this level, there is a strong bullish in momentum. That means as price keeps on getting this key level structure, price become more stronger and stronger. So I can shift my TP to be right there and use my TP1 right there. So the question right now is, what does TP1 means? TP1 means if the market should get to this level right there, I will have a tight trailing stop. Trailing stop is an order to defend some profits as the market keeps on progressing in direction of your anticipation. So let's say, for instance, the market keeps on going up, going up, going up. Let me use another clean chart. So let's say, for example, you were in a long entry and the market keeps on going up, going up, going up, going up. So a trailing stop is an order that moves with your price. So let's say, for instance, you make an entry right here. Your entry is at this level right here. So as the market keeps on going up, you keep on trailing. When the market comes up and move up, you trail. As it comes up, you trail. As it comes up, you trail. So if the market suddenly reverses all the way down, it ends you at this level right here, whereby you are stopped at this level. So this is one of the importance of a trailing stop. So instead of you making an entry right here and getting out of this level as your TP, right, thereby you end up missing a lot of opportunities to this level. No, you end up missing opportunity to this level right here. So trailing stop can help you to take advantage of these moves. So that is why I most of the time use trailing stop to ride the trend. And most of the time the market always hits my trailing stop and not my TP or my stop loss. Or because I want to give myself, or I want to open opportunity for myself to make more money in the market. And that is the only way you can accumulate more profit in the market. Because when you let your winning trade to run, you tend to make more money. And this is the saying that let your winning runs and cut your loss fast, right? So we have 40 more minutes to put an end to this class. So that is it. Now,
please, can you explain the trading stop more?
Okay, the trading stop more. All right. So let's wipe out everything right here and let's move up another clean chart right here. So let's say, for example, right here, I'm going to mark my key level structures once again. We have this level as resistance. We have this level right here as a support. We have this level right here as a minor level. We have this level right here as a major level. So we have a demand at this level right here. Now let's go to the forward chart. So let's say, for instance, okay, let's use this chart right here. So the breakout structure in this market right here started from this level. You can see that. So we had our first breakout structure at this level, right? So we can tag this level right here as a low high swing. So this is a low, no, this is a higher low swings. I mean, this is a higher low swings. Let's make it higher low so that for those who are new, they can understand what we're talking about. I'm gonna put this right here. So we have a low high swings right here. So once this low high swing was broken right here, price tested this level multiple of time, and then we have what? Equal highs at the top, right? So I'm gonna make this to be 16. So let's copy this and have it right there. We have what? Equal highs. We have EQ highs. That is a equal highs, right? We have equal highs right here. So let's say, for instance, you made an entry as this evening star that tested this level to be equal highs. Let's say for example you made an entry right here for a short position, right? Let's zoom in. Now you made your entry at this level, right? So instead of, you have your stop right at both of these doji candlestick. Now you targeted 2 risk to reward ratio, right? This is 2 risk to reward ratio. So when the market get to this level, you are out, right? Technically you should be out. When the market get to this level right here, technically you should be out, you'll be out in 2 risk to reward ratio. But instead of you getting out of this market right here, you use the trailing stop strategy. So which means as the market, this is your entry at this level, this is your entry at this level, your E is your entry, this is your entry. So instead of you to be out right here, as the market gets to this level, you move your stop loss from this level, you move your stop loss from this level to the high of this bar right here, whereby you defended some profit. You know, this is your entry, and now your stop loss is now under your entry because you are selling. So whenever your stop loss is now below your entry in a downtrend, it means your stop loss has been turned into what? Into a trailing profit, because now you are defending some profits. You know, your entry is at this level, your stop loss was above before, but now when you got into profit, you now push your stop loss to be lower than your entry. That means your stop loss now has positive value above your entry. So whenever your stop loss has a positive value above your entry, it means it has turned into a trailing stop and no more a stop loss, instead a trailing stop, right? Now you have your TR at this level right here. You have your TR at this level right here. Okay, so as the market pushed all the way up right here, it didn't get to your trailing stop, instead it pushed all the way down. Now as the market pushed all the way down based on this strong bearish candlestick that broke the next key level support right here, you trail your profit again to the high of this bar right here. So as the market keeps on moving downward as the level, as each level keeps on being broken down, you keep on moving your trailing stop at each equal or at each successful swings in the downtrend. So as it keeps on moving downward, you keep on moving your trailing all the way down, and then last you move it right there. So instead of you to be out at this level as your take profit zone, now you can see how you were able to trail some profits to this level, whereby you accumulated more profits in the market. So this is what the concept of trailing profit is all about. So that is one of the ways I take profit in the market. All right, so I only use this to ride trend. So and riding trend, you need to make sure that the market you want to trail is a trending market. There are some markets whereby the market structure is a range band medium. In this type of market, you cannot trail profit. Instead, you have to take profit at extremities at the high or extremities at the bottom. That is a range band medium. But in type of market whereby the market is trending at a specific direction, whereby the market keeps on carving a lower highs and lower low, or higher lows and higher highs, then you can trail in such type of market, right? So that is the concept of trailing, right? Now let's say for instance right now on this pressure right here, the market later moved to this level right here, and I made my entry at this zone. My first stop loss will be right here. So as the market keeps on progressing all the way up, instead of taking profit right there, I can decide to shift my stop loss right here to be right here. And you know, this was my first entry zone. So which means if my trailing is now right here, I have defended some profit, right? So if the market should keep on going all the way up and it break this level, I'll move my trailing stop to this level. So it means I'll keep on moving my trailing stop based on market structure. And in our last class, we discussed market structure. And this is why I always tell you guys, don't just underrate any topic in trading, because all these topics are linked to one another. Because the last time I was talking about market structure, some traders thought it was a joke, but traders thought maybe they were bigger than that. So if you really want to trail your profit in the market, you need to have an in-depth understanding of market structure, because without the in-depth sound understanding of market structure, you can't trail profit, because you have to trail your profit not based on your profit reward or your pain level. You have to trail your profit based on market structure. Market structure is what would help you to trail your profit. So if you are a trader, if you are still struggling with market structure ideology or concept, you can't trail profit, because trailing your profit in the market, you have to keep on trailing your profit based on swings levels in the market. That's how you trail your profit, because whenever market push into a previous structure, it means there's tendency for market to go for reversal or manipulations. Likewise, in a downtrend, when you keep on going for a short, you have to use market structure to trail your profit. So if you are still right here today, if you do not understand what market structure is all about, I'm very sorry, you won't be able to use trading stop strategy, because you need to go back to that topic. Anyways, if you are among those traders, I have a topic on market structure which I had with the VIP student. That was last week. I can send you the link. So after this class, you can send me a private message or send me a message in the Telegram group, so that I can send you the link to watch that video. Right? Thank you. So that is based on trailing stop. And another ways in which you can trail your profits. Let's move this chart right here. So I told you guys, number one, I told you guys you can trail your profit, or you can set a profit based on your trading lifestyle or your trading style. Are you a scalper? Are you a day trader? Are you a swing trader? Are you a position trader? Are you a niche trader? And the next one, you can set your take profit based on your risk to reward setup. Risk to reward setup, whereby you target a minimum of 2 or 3, right? And the next one, I told you guys, you can set your stop loss. Your take profit based on technical levels. And the next one, I told you guys, I said you can set your take profit based on trailing stop. You trade the market, you trade the market, you trade the market. And then the next one is first, let's put it down right here. And we need to put it down right there so that we do not forget, so that you guys can take note of that. Number one, you can set your stop loss based on the type of trader you are. Type of trader you are. That is number one. And let me try to number it. And number two, you can trail based on your risk. Let's use risk reward tool, right? That means you target minimum of 2 hours. Right? So let's just put this into brackets, 2 hours, right? And the number 3, you can target based on key level, technical levels in the market. That is technical levels such as your support slash or resistance. This can as well be demand or supply level in the market, right? So number 4, again, you can trailing stop. You can use trailing stop to set your take profit, whereby the market should hit your trailing stop, you are out, right? And we have the 5th one, which can be based on mental stop loss. Mental stop loss boils down to different factors. Your mental stop loss can be triggered based on volume in the market, volatility in the market, right? Volatility in the market, right? Or based on your emotions. Right? Now let's just expand this right here so that you guys can easily grab what we have right here. Right, so this is mental stop loss. And the 6th one is you can use technical indicators. Unfortunately, I do not trade with indicators, but some traders do use indicators to trade profit in the market. Sorry, I said indicators. So you can also use technical indicators. Let's put technical right here. You can use technical indicators. You can use technical indicators to take your profit in the market, right? Another way is as well is you can use another technical tools like your trend line, Fibonacci. So let's use technical tools like your trend line trend line, your Fibonacci can also be used to take profits in the market, right? So these are another factor is there again is traders can use pivot points. Pivot point is also in relation to the concept of support and resistance in trading. So it's another format of constructing support and resistance in trading. So you can use pivot points in the market, right? So if you know how to construct your support and resistance, you don't necessarily need to jam pack or fill your chart with pivot points as well, so that your chart do not have too much information whereby you have difficulty to process this information, right? So these are the 8 ways you can close your profit. And as well, fundamental factors as well can affect your take profit level. Fundamental. So let's say for instance you are long on British pound sterling paired against the USD, and there is an upcoming news that said that the interest rate in the United Kingdom will be lowered. So if the interest rate is lowered, this will affect the currency, and this could make the currency to dip, to go down. So which means if you're a long position on British pound sterling paired against the USD, you should be looking out to work out on that market. So that could trigger you, that could be a signal for your take profit. So these are the ways in which you can set a profit in the market. So today we were able to discuss about the type of trader you are, your risk to reward ratio, and your technical levels such as support and resistance, or demand and supply level. And we talk about trailing stop. So in the next class we discuss volatility, emotion, volume, technical indicators, trend line, Fibonacci, and pivot point. But I don't really need us to talk about pivot point. But if you guys want us to talk about pivot points, we can talk about it as well, because pivot point is also based on the concept of support and resistance in trading, right? So thank you guys. So you guys now can take note of all this information right here. So type of trader you are. If you're a scalper, your take profit level will be different from, or your targets will be different from a day trader. Likewise, it will be different from a swing trader. Likewise, it will be different from a position trader. The same goes for risk to reward ratio. Your risk to reward ratio is based on the risk to reward or tools on trading view, which you can use to set your TP. That means if you are risking for 1x, you should be able to target at least 2x of your risk. That is 2R or 3R or 4. And then the next one is technical level. That is setting your take profit at the next key level resistance, which I draw right here. Resistance structure. And the next one is trading stop, which I explained how you can trade your market, your trade as the market keeps on going down. For example, in this market, the best zone to trade your stop rate, to set your take profit based on trailing stop strategy would be the swings highs right here. You can see right here, this will be your trailing profit, which is equal to your TP level. You can see that. So in this type of market right now, instead of taking a trade right here, if I took this trade right here and then I have my entry right here and my stop loss is above, technically I should have gotten out right here at 2 risk to reward ratio. But I will never do that based on my own type of trading pattern, and this is what helps me to make more profit in the market, because I tend to ride the trend. So if I were you right now, what I'm going to do in this market, if I were trading this market, is I'll keep on trailing my profit to each highs, low highs, equal highs, low highs in this market. So this would have been the best zone I would have gotten out of this market, because I would have trailed my profit to this level, and when the market moved up, surged up in volume, in bullish volume right here, I would have been out right here. Now instead of getting out right here at 2.2 risk to reward ratio, I would have rode the trend to this level to be 7 risk to reward ratio. Imagine 7 risk to reward ratio to 2.2 risk to reward ratio, almost 5 risk to reward ratio additional. So that is the power, the effectiveness, the advantage of trading stop in the market, right? So do we have questions? We need to wrap these things up right now so that we can give students enough room to digest the information we have shared. So let's give time now for questions and questions. So if you have a questions in the live stream, let me know your questions. Do we have questions? Do we have questions? Questions. Do we have questions? Do we have questions? Do we have questions? If there's any question or anything you want to talk about, let me know in the comment box. You can raise up your hands, you can send a message, right? So if you are right here as a VIP student, thank you for joining us in this community. And if you are here as a free student today, that means you are taking advantage of this opportunity to see how the community looks like, should in case you want to look for enrollment in our program, in our mentorship program, in our online classes. So this is how it looks like. You can also get access to me one-on-one. You can ask me questions, you can send me a message, you can ask me, you can see me directly. It is just like we're in a physical class. The only difference right there is you can't see me physically, but you can see me virtually or digitally, right? So let me know if there's any question. If there's any question, let me know. If there's any suggestion of any improvement, let me know, right? Thank you, guys. So I'm waiting for your questions. I'm going to be going through some questions right now. Someone said, thank you, I really enjoyed this class. I am glad I opted in for online class. You are welcome. You are welcome. So we have any question right here. Someone said, I'm a beginner. I didn't even understand what we are saying. Do not worry if you do not understand what I'm saying. We have a beginner's course whereby we introduce you to the beginning. So if you do not understand what we are saying, we have a beginner's course which we're going to introduce you to the beginning of trading, right? So Prince Joe, is everything clear? Am I communicating?
Yeah, everything is clear already.
Right.
I already understand.
All right. So in our next class, we're going to talk about mental stop loss, volume, volatility, emotions, technical indicators, technical tools, trend line, Fibonacci, how you can use trend line to set your take profit, and how you can use Fibonacci to set your take profit, and then how you can use pivot points and fundamental factors, right? So I don't believe in taking much of my student time, since we are able to go through the vital information right now, and I don't want to jam pack everything together so that you guys don't get into a state of confusion. So it's better we split this into two. So Wednesday we're going to be right here, let's keep to time, 10:30 a.m. to 12, and this is going to be for the VIP students, right? So thank you guys. I'm looking forward to see you in the next. Okay, ask a question.
Yeah, I have a question, please.
All right.
Yeah, assuming now I draw my key zone, like my support and resistance from weekly time frame, and when I want to make my entries, I got my confirmation from something like 4 hours time frame.
Yes.
Am I to execute the trade immediately after I finish seeing my pattern, or should I wait for a pullback or something? Is there any other confirmation I needed before I can execute my trade?
Yeah, it all depends on the setup involved. For example, if you can see a trade setup on the 4-hour chart, and the weekly chart is showing you it's a bullish setup, and on the 4-hour chart you see a pushback. So let's say, for example, you have an inverted head and shoulder on the 4-hour chart, right? And the price broke out right here. If the volume is not too far away from your neckline, you can take the trade. But if the volume is too far away, whereby the market has gone too far, it's better you look out for a retest. And then number two, again, if you can see an inverted head and shoulder, for example, in a downtrend, and after the market broke out of this neckline, the volume that broke out of this neckline is not a LD breakup structure. It is better for you to wait for price to move up for a retest. Now let's take, for example, the trade I took on copper. Let's go back to copper. Let me show you an example of what we did on copper. For example, right now you can see on copper right here now, I made an aggressive entry. Let me clear all this right here. So let's go right here. So I'll be monitoring this trade right here from the weekly chart as a swing trader. So I constructed my key level from the weekly chart. So this is the weekly chart. You can see on the weekly chart, this level is obvious. We have resistance, breakout of resistance. What do we have? Push back into these other block zones right here. Okay, so now after I got this right here on the weekly chart, then I started monitoring this level. So I now went to the day chart. On the day chart, so this is the day chart right here. You can see that I'm monitoring this from last week. Now I went to the 4-hour chart. So on the 4-hour chart, what do I have? On the 4-hour chart right here, you can see I have an inverted head and shoulder. So the reason why I took this trade is, of course, I should have waited for price to break out right here and they make a retest, but I didn't want to do this because based on what I can see right here, I can see this level right here prove to be a significant support level 2 times. When price got here for the first time, we have been rejected upward. Second time, we have been rejected upward, and this was the neckline right here. Now the reason, this main reason why I took the trade setup right here was based on the fact that from the weekly chart, this was a strong technical level with a order block zone. There was a order block right here, bullish order block. You can see that right here. Price pushed to this level, and the last week was being rejected right here. Now based on the 4-hour chart right here, I can see an inverted head and shoulder, and the main reason why I took this trade was because of this bullish candlestick I have right here, because it was a strong bullish 4-hour close into this level. So because we had a strong 4-hour close into this level right here, this was the reason why I made my first entry. And then take note, I executed a small position size. I didn't go in with my full size because I still want price to move up, give us more retest so that more traders can get in, because there are some different types of entry. We have aggressive entry, conservative entry, and extra conservative entry. We discussed this in our later course. Aggressive entry is the type of trader that tend to make the first attempt with a small position size. So I use the aggressive entry right here. So let's say for example my normal account or position size is 1 standard lot. So instead of taking 1 standard lot right here, I won't take 1 standard lot. Instead, I can just take like 0.5 or maybe 0.25. So if the market should go up and they give me a retest back and I can see a strong technical bullish signal for me again, then I can add my 0.5 or my 0.25. Then I keep on trading all the way up. So if the market keeps on adding more, going upward, then I'll keep on adding more. That is what we call scaling trading strategy. Scale up in trading. So this is how we do it. So it all depends on the volume you can see in the market. The volume you see in the market determines how you make your entry. Maybe you wait for a retest, because most of the time or sometimes if you keep on waiting for a retest, the market might not give you the opportunity of a retest, whereby you tend to miss a good trade. This market now could keep on going up and don't come back again and keep on going forever. So you missed up this. So what I do is, once I see that this level is a significant level, then I can do what? Then I can just make my first entry with a small position size, right? So if the market keeps on going, then I know, all right, then I have to do what? Keep on adding to my position. All right, guys? So that is it. Do not worry, as time goes on, we keep on diving deep into entry strategies, because there are a lot of factors, a lot of things we have to combine in trading. Aggressive entry, conservative, extra conservative entries, right?
Yeah, because I'm not really familiar with this head and shoulder entries, and the thing is really making me to be losing a lot of entries and all that.
Do not worry, once you have me as your mentor right now, and once you are my VIP student, do not worry, the problem will be solved, right?
Alright, thank you.
I think that is Joe, right? That is Prince Joe, right?
Yes.
I think you used another account to join, right? All right. So thank you, guys. So we'll be right here Wednesday. If you are a VIP student, you get an update from me, right? So thank you. See you in the next one. Peace.